Hi everyone, my name is Nurhaifa binti Makzuki and my metric number is 264765. So my bank is Bank Mandiri of Indonesia and the data gains in this analysis is from 2016 to 2020 of annual report of Bank Mandiri Indonesia. By total asset, which is considering the cash, loan and deposit, Bank Mandiri is the Indonesia's largest bank. And Bank Mandiri itself have 2,511 branches in the 3 time zones in whole Indonesia. And also, Bank Mandiri have 7 branches overseas and 30,270 ATMs around the world, including the whole Indonesia. For the extra information, Bank Mandiri have 5 major subsidiaries as December 2020, which are Mandiri Sekuritas, Mandiri Tunas Finance, ASA, Mandiri Financial Services, Bank Mandiri Taspen, and Mandiri ASA. And also, by properties, Bank Mandiri is the Indonesia's second largest financial institution. So, we all know that credit risk cannot be completely avoided, but credit risk can be reduced. So, in order to adjust the credit risk with the current situation, which is the pandemic COVID-19, it is not only necessity for bank, but it is also a way to gain the competitive advantage. So, the research objective. The first one is to determine the impact of internal factors that will affect the credit risk. The second one is to analyze the macroeconomic factors, or we can say that external factors that can affect the company's debt payment ability. The last one is to define the internal factor and macroeconomic factors that can affect the company's debt payment capabilities. So this is the list of firm-specific factors or internal factors and macroeconomic factors, or we can say that the external factors. There are 14 internal factors and 5 external factors. So now we will move to the chapter 4, which is the analysis. The first one is the value of R squared. For the internal factor, the value of R squared is 0.819. For the external factor is negative 0.582. And for both internal and external factor, the value of R squared is negative 1.009. So for the internal factor, the value of R squared is close to 1. That means the linear regression is somehow fit in the model. And for the external and both internal and external, the value of R squared are negative. And the negative R squared means that the prediction tends to be less accurate, or we can say that as one variable increases, the other variable tends to decrease. So we can see that the internal factor is the only factor that have the positive value, and we will focus more on the internal factor only. So for significant value of the internal factor is 0.269. This is greater than 0.05. So we can say that the regression model does not have the consistent variable in the internal factor. So this table is the correlation for the internal factor. We can see that the loan on the risky sector and the regulatory capital have the positive value that is positively correlated with the CR. And for the Islamic finance contract and the bank management have the negative value, which is negatively correlated with the CR. And between the RSET and recap, the regulatory capital have the value of 0.065, which is near to 0.05. So we can say that the value is near to the strong correlation, which is correlated with the CR. Okay, so this is the last chapter, which is the conclusion part. So from the outcome, we can see that the internal factor is the most significantly affect the credit risk positively. Therefore, the short-term cost and commitment should not be ignored in order to control the credit risk. In addition, the regulatory capital is the most important effect of the credit risk because the p-value is near to 0.05, and this implies that the value is near to the strong correlation with the credit risk. So banks should maintain 8% for their regulatory capital in order to survive. For the limitation, it is not suitable once I using only one bank to generalize the entire country. Where this is when I only use the Bank Mandiri to interpret the banking industry of Indonesia. And also, this report only used the 5 years annual report, and it is the limit for the report. That's all from me. Thank you.